You're listening to AI PRISM from Seoul Economic Daily.
Korea's AI ecosystem just got a stark warning from its own experts. Strong models, weak market to prove them in. Chinese AI labs shipped 10 major model updates in about 70 days, at a fraction of U.S. costs. Pause, Hyundai's chairman just told his executive team to stop chasing quarterly numbers. Naver is now betting on AI data centers that float on the ocean. It's Friday, August 14th. Let's look at a business story shaping corporate Korea. Korean companies are moving fast on AI infrastructure and long-term strategy. At the same time, competitors close the technology gap. Chinese AI developers are now matching U.S. performance at a fraction of the cost, intensifying pressure on every company that depends on AI tools. Corporate leaders are responding with capital allocation decisions that will play out over the next several years, not the next quarter. Here's what the numbers show. Chinese AI firms released 10 major model updates in roughly 70 days, with DeepSeek's V4 Pro scoring 53 on the Artificial Analysis Intelligence Index versus Claude Opus 5's 63. DeepSeek's V4 Pro costs $0.06 per task, compared with $2.34 for Claude Opus 5, a 39 times cost gap. Korea ranks third globally in AI model development with 8 notable models, behind the United States' 59 and China's 35, but its AI adoption rate reached only 30.7% with far less commercial testing ground. Pause. Last year, AI private investment totaled $285.9 billion in the U.S. and $12.4 billion in China, compared with about $1.8 billion in Korea. Hyundai posted 42 trillion won, about $31.1 billion in first-half revenue and 6.96 trillion won, or $5.2 billion in operating profit. Chairman Chung Ki-sun convened Hyundai's group presidents for the first time in 8 months, pressing 11 affiliate CEOs to prioritize long-term growth over near-term results. Naver invested in ocean-based AI data center startup Pantalasa through U.S. venture firm 8090 Industries, expanding beyond its NVIDIA-linked AI factory build-out. Samsung Electronics and SK Hynix added 117 trillion won, about $86.7 billion in combined cash reserves this year, giving Korean tech firms capital for further AI investment. So, what does this mean for executives steering Korea-linked operations? Earlier, we said Korea's AI ecosystem has strong models, but a weak market to prove them in. For multinational executives, that gap is now a competitive risk, since Chinese rivals are testing and improving faster at a much lower cost. Boards overseeing Korean supply chains or joint ventures should treat AI cost curves, not just performance benchmarks, as a strategic variable in vendor and platform decisions. The bigger takeaway from Hyundai and Naver this week is that Korean corporate leadership is explicitly prioritizing multi-year infrastructure bets over quarterly optics, which changes the pace of decisions global partners should expect. That's today's AI PRISM CEO. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.